like to thank the organizers, the Marias, for this kind invitation. If I may share with you a personal anecdote, when Rituji contacted me, I didn't think it was appropriate for me to be here, and especially at this August gathering. I'm not an education expert, but she used her people and persuasion skills, and so here I am. And it's a great pleasure for me to be here on behalf of the International Finance Corporation, which is the private sector arm of the World Bank. And as you know, the World Bank works with the governments by giving finance and advice for development purposes, including education. The IFC works directly with the private sector through finance and advice. Finance can be both equity as well as debt. With the largest financier of the private sector in the developing world. Last year, we did $25 billion in commitments world over in the developing world to the private sector. In India, we do about $1 billion, $1.2 billion a year directly to the private sector. We make money. We set aside some of that for advisory services and development purposes, which works both on PPPs, looks at investment regulations, and works directly with the corporate sector. Every IFC investment has to have both the profitability and sustainability, as well as the development impact. And recently, we've been hearing about a new concept called shared value, which is where enterprises and the private sector can work as part of an intrinsic business model to tackle some of society's development challenges. This shared value concept is promoted by Professor Michael Porter and Professor Kramer, and increasingly, education institutions are imbibing the shared value concept, and certainly education institutions can do so better than most industries can. For example, I was in New York recently and I was speaking to Pearson. Pearson is one of the largest publishers, as you might know, of books globally, including textbooks. Their mission was earlier to print books, and number of books printed was really their bottom line. They are now repurposing their vision and mission, which is outcome-based. And we've heard many speakers talk about this already. Their mission and purpose is no longer to produce books, but to improve literacy, to improve employability, and those outcomes are driving their business model. And to do so, the entire company is now got this dual purpose and this revised mission. And the incentivization to the CEO is not only just what you do in terms of profitability, but what you do for the outcomes towards the mission. And the variable pay of the chief executive is based on that. So a changing concept, shared value creation, is coming in to play. And I think we're very well positioned as the education industry to do so. IFC, in terms of education, in terms of investments, is limited to some extent because our mandate is to provide finance for-profit enterprises. And as you know, many of the education institutions are set up for not-for-profit, even though we have done debt in this space. But the kind of institutions we've financed in the past are NIIT, et cetera, et cetera. But we're looking to do more in this space now. Rituji wanted for me to talk about SMEs and their education. This is an area where we've worked with Amit Ji and S. Chand in the past. She felt that many of the members here would be SMEs. SME development we do through two areas. One is through finance. We provide finance through the financial institutions for on-lend to SMEs. Most of the banks that you could think of, we're working together with them through finance. But we also are providing advice and training content for SME development. We've developed a content called Business Edge, which is now used globally, but every culture, every society learns differently. So it's been adapted for Indian conditions, and it's now being used across both NISBUT, the SME Training Institute is using this, many franchises are using this. At the same time, we're looking at an e-learning program for for introducing business edge. Another e-learning program is SME Toolkit. So if one Googles SME Toolkit, you'll see ICICI Bank is using it for providing business training for SMEs who have limited time to go out. So it's a combination of distance learning and web-based learning, about 1 million or so users of this, but increasingly we're seeing the effect it has on business. The World Bank itself runs a global distance learning program where SMEs globally and education institutions globally are connected to share best practices in learning and to have a global community. There is also a new concept that is, I'm particularly very interested in. These are social enterprises. Last mile delivery remains a challenge. So an example of a company that IFC and the World Bank have assisted is as Educate Girls. As you know, Educate Girls is a model of education for girls which was piloted in Rajasthan very, very effectively to getting more girls enrolled and also looking at the outcome of the education. So these social businesses, which are both social in nature but are still sustainable, is something that is gaining ground. The government of India has just set up the India Innovation Fund to fund such enterprises. So if one has a business model that is to be piloted, to be scaled up, there's a lot of funding and advice available for that scale, for that space. There's a new association of social enterprises that's been set up. It's actually headquartered in Delhi, called NACE. So social businesses, grassroots up and scaling is a new area for attacking this space. And education is clearly well positioned in terms of social businesses and social enterprises. I'd like just to close by saying that whereas I wasn't an education expert, I did suggest to Rituji that my brother, who's just returned from the US as the founding chancellor of Shivnada University, should be invited. I'm told that he's coming in tomorrow. So I think he'll be able to talk much more about the education side and how India can push the education space. But I'd just like to close by thanking Amitji and thanking the organizers and for all of you for your interest and thank you.